Good evening, Zimbabweans. My fellow Zimbabweans, the Zimbabwean economy recently experienced a rise in month-on-month inflation from a monthly average of 4.5% seen in the past 12 months to 15.5% in April 2022. While the recent increase in domestic inflation is substantially attributed to recent global shocks, domestic factors are also at play, mainly attributed to the pass-through effects of the recent exchange rate depreciation on the parallel market. If not contained, the continued depreciation of the domestic currency against the US dollar may lead to reversal of economic stability gains achieved since the introduction of the foreign exchange auction system in July 2020. The government is aware that economic fundamentals to support a stable domestic currency are currently in place, as evidenced by the amount of foreign currency being generated in the economy against the quantum of local currency deposits. For instance, the country generated foreign currency in excess of US 9.7 billion in 2021 compared to US 6.3 billion recorded in 2020, showing an increase of 53.5%. Foreign currency earnings for the first quarter ending 31 March 2022 were US 2.4 billion US dollars, representing an increase of 15.9% from US 2.04 billion generated during the same period in 2021. Resultantly, the foreign currency liquidity in the economy has continued to increase to reach the current level of US 2.4 billion, made up of foreign currency accounts, FCAs, deposits of US 1.4 billion and national reserves of US 1 billion. Similarly, the country's fiscal position has been favorable since 2020, thus enabling government to avoid monetization of the budget deficit, which increases money supply and inflationary pressures in the economy. The existence of strong economic fundamentals imply that the recent exchange rate depreciation is driven by factors outside the obtaining economic fundamentals. This is comparable to the work of economic hitmen. Government is therefore convinced that the recent exchange rate movements are being driven by negative sentiments by economic agents as opposed to economic fundamentals. These negative sentiments have been propagating adverse expectations on future inflation and exchange rate movements, thus giving rise to artificially high demand for foreign currency as economic agents hedge against expected high inflation. Unfortunately, this practice has become a self-fulfilling process by becoming the driver of exchange rate depreciation and inflation in the economy. This vicious circle needs to be broken. Against this background, government is putting in place the following measures to restore macroeconomic stability, boost confidence in the economy, increase the appeal of the local currency, preserve value for depositors and investors, and deal with market indiscipline. These measures are expected to restore macroeconomic stability and support the current robust economic recovery trajectory. Restoration of lost value on bank deposits. The currency changeover of 2019 adversely affected the value of bank deposits of the banking public, mainly as a result of the depreciation of the exchange rate. To address this value erosion, government has resolved to compensate the loss of value on bank deposits to individuals who had funds in their bank accounts of US $1,000 and below as of end of January 2019. The compensation for amounts less than US $1,000 has begun and will continue. Currently, a framework is also being put in place to compensate individuals with the bank accounts of up to 100,000 US dollars. The amount required and implementation modalities of this policy will be announced in due course, guided by the Public Debt Management Act and the Reserve Bank of Zimbabwe. Clearance of foreign auction backlog. Whilst considerable progress has been made in clearing the auction allotments backlog, government is proceeding to make available sufficient resources to clear the backlog balance by the end of May 2022. With immediate effect, the Reserve Bank will ensure that all foreign currency allotments are settled within a period of 14 days post-auction allotment, and that the auction system only allots foreign currency that is available. With regard to continuation of partial dollarization dual currency system, the current partial dollarization or dual currency system shall continue as the government's preferred system of payment and transaction within the domestic economy under a carefully managed de-dollarization process which is aligned to the economic fundamentals. Similarly, collection of revenue in foreign currency and subsequent spending of the same shall continue in order to support critical government programs and projects such as importation of COVID-19 vaccines and syringes, bore drilling equipment, and completion of infrastructure projects, debt service, liquidating legacy foreign currency obligations, and other foreign payment commitments. Government is committed to a market-determined exchange rate system. In this regard, the willing buyer, willing seller foreign exchange system put in place on 1st April 2022 shall continue to be used as a benchmark for price discovery of the exchange rate and for the smooth operation of the auction system. Over time, the auction rate and the interbank rate established through the willing buyer, willing seller will provide the basis for orderly unification of the exchange rate. Reviewing the willing buyer, willing seller trading limit. Since the inception of the willing buyer, willing seller foreign exchange system, banks have managed to purchase more than they have sold under the US 1,000 foreign payment limit per day per individual. With immediate effect, the amount that can be traded under this arrangement has been increased to a maximum of US $5,000 per day, with a limit of US $10,000 per week per individual. Retail/wholesale pricing. The willing buyer, willing seller interbank foreign currency management has assisted in the price discovery mechanisms of the exchange rate in the economy. In this regard, retailers and wholesalers are, with immediate effect, allowed to benchmark their pricing to the average interbank rate with a maximum allowable variance of 10%. This would ensure increased discipline and a level playing field in the pricing of goods and services in the market under a dual currency system. Additional measures to strengthen demand for local currency. Government has already announced the measures to strengthen demand for local currency by allowing payment of duty, royalties, and the taxes in local currency. To further boost the appeal of the local currency, government is putting in place further measures and incentives to expand the use of the local currency, consistent with the quantity of local currency in the domestic economy and in line with the envisaged de-dollarization roadmap as follows. Reserve money growth. Monetary policy has also remained on a tighter path, as shown by continued reduction in reserve money growth targets from above 10% in 2020 to current levels of about 5% per quarter. Commendably, reserve money supply has remained under control and stable at the current level of Zimbabwe dollars 28 billion for the past 6 months period, ending 30th April 2022. Therefore, with immediate effect, the quarterly reserve money growth will be further reduced to 0% per quarter. Proportion of taxes payable in local currency. Government reaffirms its commitment for exporters to pay more of their taxes in domestic currency. This is currently under review. Tax incentives for using local currency. Government is, with immediate effect, putting in place a differential taxation system for the intermediate money transfer tax, IMTT, as follows. Roman 1, 2% would continue to apply to local currency transfers. And Roman 2, all domestic foreign currency transfers to attract the intermediate monetary transfer tax of 4%. Foreign payments settled through the willing buyer, willing seller, and the foreign exchange auction system shall remain exempt from the IMTT. This is the intermediate money transfer tax. Foreign currency cash withdrawal levy. There is a preference to withdraw foreign currency for transaction purposes, thereby undermining IMTT collections, given that cash withdrawals are not liable to IMTT. In order to discourage the withdrawal of cash which is traded on the parallel market, the cash withdrawal levy for amounts above $1,000 will, with immediate effect, be reviewed from the current 5 cents per transaction to 2%. settlement of foreign currency tax obligations in local currency, Zimra rate, the settlement of the local currency component of the foreign currency tax obligations for duty, royalties, and other tax heads will, with immediate effect, be at the interbank rate established through the willing buyer, willing seller exchange rate system. Similarly, liquidation of the surrender portion of export proceeds will, with immediate effect, be settled at the willing buyer, willing seller exchange rate. Measures to foster market discipline. Suspension of third-party country payment on foreign payments. In order to continue to foster market discipline within the foreign payment, banks shall, with immediate effect, not process third-party country foreign payments. The third-party foreign payments are susceptible to illicit financial flows, which prejudice the country of its hard-earned foreign currency resources. Suspension of lending by banks. In order to minimize the creation of broad money that is prone to abuse for purposes of manipulating the exchange rate for financial gains, and to allow current investigations, lending by banks to both the government and the private sector is hereby suspended with immediate effect until further notice. Fostering discipline on the stock market, the Zimbabwe Stock Exchange. Government has noted regulatory weaknesses in the custodial system of the Zimbabwe Stock Exchange subsystems, which are fueling parallel market activities. The current system allows clients to sell shares and then transfer the proceeds to third parties for purposes of trading forex. In addition, brokers can transfer funds from one client sub-account to another, which have become the basis for fueling parallel market activities. In view of this challenge, the following measures are being put into place with immediate effect to foster discipline on the Zimbabwe Stock Exchange. Inter-account transfers between client sub-account with a broker are now prohibited. Third-party funding of client sub-accounts is no longer permitted. Transfer out of a client sub-account with a broker shall only be allowed to the customer's bank account and not to third parties. And the Zimbabwe Stock Exchange will have powers to undertake regular and continuous monitoring of broker transactions, share trading, and custodial changes. For this purpose, an electronic monitoring system will be established in the Zimbabwe Stock Exchange urgently. The Securities Exchange Commission will continue to undertake the overall regulatory role, including oversight of the Zimbabwe Stock Exchange. Review of capital gains tax for short-term investments on the stock exchange. Capital gains tax are currently standardized at a rate of 20% at the time of sale. This flat rate does not encourage long-term holding of stocks and shares. As a result, the stock market has been characterized by speculative bubbles as more investors speculate and take the profits to the parallel market for value preservation. Accordingly, to promote long-term investments on the stock market, government has, with immediate effect reviewed capital gains tax for shares held for a period not exceeding 270 days to 40%, in line with individual maximum marginal tax rate for pay-as-you-earn payee. This measure would deter short-term speculative buying and the selling of shares. The capital gains tax will remain at 20% for long-term investors beyond 270 days. Enhancing market discipline, the security agents of government and the Financial Intelligence Unit shall, with immediate effect, enhance their roles to effectively monitor financial transactions in order to address the delinquent arbitrage behavior in the economy. Civil penalties shall be substantially reviewed upwards to ensure that such behavior is discouraged. Appropriate legal changes shall also be instituted to elevate some of the financial crimes to become criminal offenses, which automatically attract jail sentence. Opening up of the public transport system. Government is proceeding to open up the public transport system for other players in order to complement the services being provided by Zupco, in line with the reduction in COVID-19 cases and the subsequent opening up of the economy. To complement the above measures, government will allow for the duty-free importation for a period of 12 months for vehicles which meet regulations to be issued. The liberalization of the public transport system shall be done under terms and conditions to be published by government. The police would need to ensure that law and order is adhered to, as the behavior on our roads needs to be seriously attended to. Non-adherence to the rules and regulations to be gazetted would not be tolerated. In conclusion, the above policy measures will buttress the current monetary and fiscal policy stance, which have proved effective in sustaining the positive economic growth trajectory. Therefore, the envisaged stability in the exchange rate and inflation will go a long way in ensuring a durable macroeconomic environment amenable to supporting robust economic growth, foster prosperity, and ensuring equitable distribution of wealth, and guaranteeing that no one and no place is left behind. In this regard, the measures pronounced in this statement will go a long way in boosting confidence by addressing the loss of value on individual savings that arose as a result of currency reforms, dealing with market indiscipline, incentivizing the use of the local currency, and minimizing exchange rate distortions. Government will review the impact of these measures. I thank you.